Hi, Warriors. Welcome to F.A.C.E's live coverage of the BOE. How's everyone doing today? I want to kick it right off with Ryan. Do we have a decision from the BOE yet, Ryan?
Oh, dude, that went down already.
Hi, Dale, that was an hour ago.
Yeah.
Okay.
Yeah.
All right.
They held
All
the
right.
rate still.
So-
they held the rate still surprisingly percentage-wise. Let's put it that way. Increased QT a little bit, but there was an interesting line in the minutes saying that apparently they have seen tomorrow's PMIs already, and that may have been part of the decision to keep their hands still. So I guess the market will now think that the PMIs tomorrow will be weak. But we had a bit of a drop in the sterling, but it stabilizes here just below the 123, the figure 10, which is going to be an important one, I think, for the close today. Prior low, also the underside of that little channel that we were doing to the on the way down, and a bit of a FIB action in there. So that's going to be the close, I think, in the interesting level to watch on the close. But overall, it's looking weak for the sterling still. There was a bit of doubt about what's going to happen, since the market has already been selling a lot of sterling into the announcements and buying dollars. But yeah, the fact that we can't rally back up right now to the 123 is likely telling that's going to be an important close, in my opinion, over there.
Okay. So there's a dollar index. Must have been wild last night with this spike that we had, because this is where we went out in New York. So this was wild. Any reason why yen is down with the strong dollar? And to me, it looks like this 47.5 is going to be very important.
It's we're ahead of the Bank of Japan, and I reckon people are managing their books. Some sterling, some yen crosses also, which were very big, have been sold. Risk is coming down with the equity markets coming off. And now we're waiting for the Bank of Japan. And Ueda, as I was saying already a couple of times, he will have to give us something. He will have to explain to the market what he meant, and perhaps even the timeline, because there's still a bit of doubt over whether he meant end of the calendar year or end of the fiscal year. If it's end of the fiscal year that he is looking to really move on rates, it may just be a temporary sell-off in dollar yen and yen crosses, and then we spike again after the Bank of Japan, and the MOF can go to work. That's about it for the Bank of Japan. The important thing is, though, and I've been hammering on about that since actually Ueda came to the Bank of Japan, is that they were saying that they are going to closely cooperate, the government and Bank of Japan. So there's not a lot, well, not full independence, at least over there. So I don't think that Ueda will start to really hike rates just now that the Japanese government is putting in place another very big stimulus plan, of which we should have the results early October, or the details early October. But it could be up to 150 trillion yen, which is, in today's money, just over $1 trillion worth. So yeah, he's going to have to give the markets a little bit for the yen to continue to strengthen, in my opinion. If not, yen could get hammered again.
Okay. Yields following going up despite the yen pulling back. We have some divergence here. I think the key decisive day was really in the S&P. We couldn't get back over the throw over. And yes, I'll address it. I want to address this because yesterday when I was talking about the VIX, and I thought I said, if there's a pullback for a third drive, there'd be opportunities to sell risk and sell currencies higher. I said the difference between how I trade now and before is I'm not going to trade it, because that's not the trade. The trade is if it gets back down here. So in fact, we had, and I said back over 1480, we have a breakout. So we have a breakout in the VIX. We'll see if it holds, but to me, it looks like a breakout. And I don't care if you have any kind of bounces here now. Yesterday, I think, was as decisive as last Friday, and we're headed for much lower levels. I've been talking about 4,200 being a possibility for a while. Still short Amazon. Amazon's been getting hammered. It's given up like $10 in less than a week, sitting at its 50-day, can open underneath it. Apple still under pressure, but holding up better than that. And the regional banks, which I'm short, are breaking down. So I think Mandy, you were correct. It was a double bottom in VIX. And you asked what you won. And I said, well, it depends on how much you bought. I know I'm long VIX. I was going to come in and add this morning, but not on a gap higher opening. So I think that's really, maybe this is what's driving everything, rather than just, maybe safe haven buying coming into the currency, into the FX market with what's going on here.
Hey,
What do you
Dale,
think?
have you seen copper today? We broke.
Copper broke. Yeah, so
Yeah.
you've been warning about a potential breakdown in copper for a few weeks now, Blake, and we're getting it. So here it is.
Yeah, today's like day
There's your
one.
line. There it is.
Yeah, scary.
So you have a breakout in VIX and a breakdown in copper. That is not a conducive environment for buying stocks.
For risk taking. Yeah.
Yeah. Well, and gold's coming down with it too, and silver, and I'm patiently waiting for gold. I don't know how much longer I'll have to wait, but I still think there's plenty of downside in gold, and plenty of downside in silver too. If we get the that harmonic manifests, or this blue line, or their wave counts here. And how about a tip of the hat to Grega? So Grega said yesterday, and that's why it's great to have access to his work. He came in and gave it away yesterday. He said one more high in the dollar, and that will be completing something. I don't know if it's today, but you could see how on multiple time frames we're not confirming these highs. Maybe we just have to take out where everyone has their stops. I always thought this would be where's the grand prize? It's on the weekly. It's this high that all the bears are hoping it doesn't take out. That comes in where at 105.88. So we're almost there. So I'd say it's a little late to start chasing the dollar on this move. I think we'll get a pullback before the next wave up. So great calls by Grega on yields and on the dollar. It's a great to have him on the team.
And it just happens to be Grega's birthday today.
Oh my
He's
God.
not here, but it happens to be his birthday today. I know.
You gotta get him in here.
Seriously.
Get him in here. What is he? That Grega really is 75 years old. The guy looks great. I mean, it's amazing. It must be the lifestyle in Eastern Europe.
It's being a footballer. Yeah.
Huh? What do you think so?
He's a footballer. I mean, what can that
So-
everybody's in shape. Those guys run like 25 miles a week.
Yeah. So, I don't think this move in the dollar was a surprise to anyone that's been following us. We've been looking for higher levels. A couple times I've looked for reactions to happen. They never really developed. One real nice reaction happened, but that's, someone was asking me, Blake, Dale, what should I trade? Should I trade stocks? Should I trade, commodities? And I said, FX has a reputation for once a trend starts to be the most consistent and persistent trenders. And this move in the dollar shows you that once it started, if you tried to get cued a few times and, oh, I'll book it, I'll buy a pullback, I'll book it, I'll buy a pullback, you miss the train. So I think it proved it. Do you guys believe that too? Ever hear that FX is they're the best trending markets out there? Okay, man,
Yep.
you're an old timer like me, and Ryan, you've heard that?
Yep.
Okay, so that's a great example of a trend. So what's everyone doing here now that BOE is out and the dollar's roaring and the S&Ps are another 30 handles lower? Ideas?
Yep. Got the
Any
BOJ
ideas?
tomorrow. That's the
Yeah.
next one to look at. I've just picked up some guppy, used the BOE as a bit of a way to get into a yen trade a bit cheaper, something a bit different. So I think that's the next thing we've got to look at, whether the Bank of Japan gives us any new language changes, is hawkish at all, or if they're just going to stand still and maybe dial back on Ueda's comments from last week. So I think that the balance of risk suggests that we see yen weakening after. Anything else will be a bit of a shock, really. Okay,
so you're getting a nice little wick here. Maybe it's got a chance, Brian. Sometimes just like there wasn't a 3, and I talked about in the VIX, sometimes 2 is enough, and we've had 2. Here's 1, 2. The one thing that if you trade the 3 drives, one of the rules is on your first divergence, say you're long, say you bought the dip because it was a confirmed high. On the first divergence, you cover. You don't. You're getting a new high or low without momentum confirming. You're getting out of the position so that if it only is 2, at least you're not caught the wrong way. So
Yeah.
if you guys trade the 3, that's an important thing to know. That on the first one, divergence, you cover, you liquidate, you're flat.
Yeah.
Awaiting the next signal. So yeah, good luck on that one, Ryan. Maybe you get something like this from here, only a little less vibrant. This
Yeah.
is a nice
Hey,
move.
Hey, Ryan, while you're doing that, really quick, and I know Kman did as he was stepping in here, talking a little bit about the Bank of England. Viewers obviously are trickling in as we've been going on since Kman has spoken. Why would you be getting long the sterling down here after getting crushed overnight? And I know the answer. I'm kind of probing you for show reasons. You got the sterling that. The UK did not, or the Bank of England did not raise rates as expected, which was a bit of a shocker. And Kman had mentioned they had cited PMIs, but you do have their balance sheet being tightened at a more accelerated pace. What's your reasoning though for buying the sterling yen? Couldn't you just buy the dollar yen or?
I could do, but I'm already long dollar yen from 147, so I'm not buying that at the top. Thank you very much. While it's sitting up near the highs. Right. So yeah, if you're looking at opportunities, something like that where I think that the yen is going to weaken. Well, guppy is 100 pips cheaper than it was a couple of hours ago.
What about euro yen, Ryan? That did not take out the lows like the guppy did. Yeah,
that's another contender. But euro's still looking a bit iffy as well. It's really I'm just looking for bang for buck. I can't really see euro yen going up 400 pips, but I can see guppy going up maybe 200-300 pips. So it's really bang for buck that I'm looking at. If it goes right, it might go wrong, and I will come in tomorrow's show and with egg on my face. But you got to take what opportunities you feel
what
at the time.
Eggs are very good moisturizers. for your skin.
Hey, Dale,
so
Dale,
don't
I'm going
worry
to take
about it.
over from here real
All
quick
right,
because
buddy.
we got about
Go.
15 minutes. We had a lot of other central banks that met. You know, Charles just brought up the Swiss National Bank. This is a big move, guys. I mean, the dollar Swiss has broken the 200-day moving average. You got the Euro Swiss finally breaking its base. Can you guys, in a few short words, maybe Kman? I know you've been bearish the Swiss as well. You and I have been trying to scramble around buying this stupid, selling Swiss francs. We've been both trying to do it, over the last few days. Why'd the Swiss get smashed today?
So they surprisingly did not hike the rates. Yesterday, we thought that the Swiss government was giving them the green light to actually raise rates one more time because they came up with the CPI inflation being above 2% for 2023. And then surprisingly, SNB put the inflation expectations down to 1.9, which is within their expected inflation range. So they did not hike at all. And although they still look at the FX to use FX to combat inflation, and the fight is not over, it does feel like they are coming to certain levels, especially if they confirm that inflation under 2%, that they may be kind of softening their stance a little bit. So the Swiss got hit on that. And thanks for reminding me that I missed my dollar Swiss entry yesterday for what, 1.8 pips or so.
Oh, I thought it was like a 0.1 pip.
I bought Euro Swiss actually right before the announcement and then more after the announcement. It may not be the best one. I think the dollar Swiss still may be the best vehicle somewhere. But then we are just in front of big levels on the euro dollar, and I don't know. This morning, I just bought Euro Swiss, and I think we are in for a bit of a move, but we need to break that 96.75 on the Euro Swiss. Okay.
Right. Yeah. The Swiss looks weak. Let's also talk about the Well, actually, forget that. I want to talk about the Riksbank really quick because you can see it's the one. It's really just getting smashed this morning. The Swedish krona, and here we are up against the 78% retracement. Is this gonna break out now? Following the Riksbank today.
Sweden is weak because they announced that they would do some FX hedging against their reserves, which is another word for potentially intervening a little bit. But they are going to do about $10 billion worth, but then spread out. They said they could take 4 to 6 months to do it, which is really a watered down intervention, if you ask me. And Swedish krona reacted straight away when they came out of it. With that, it went 1% stronger, and then in the meantime, since then, it already lost 1.5% versus the low. So, yeah, we are. Sweden just remains very weak, very weak.
Yeah, and then the flip side is you got the Norges central bank says there's more rate hikes possibly coming. Gave us that indication. Yeah, this is weak too, and that's in the face of crude oil being super strong, and crude just continuing this rally higher. So I don't know. It's been a wild night in central bank activity land, that's for sure.
Yeah, crude is trying to make up its mind, and then but for the Norwegian krone, you have to look at Brent. It is holding. It's actually rebounding from the morning lows, but. Let's not forget as well that Scandinavian currencies, just like sterling, actually, in to a certain extent, also trade with risk. Okay, so if you got stuff like the Swedish krona, Norwegian krona, perhaps a little bit less because that's coupled to energy as well. But if risk comes down, Scandinavian currencies usually are feeling some heat.
Yeah.
So if we're going to 4,200 in the S&P. Can you price this stuff now where it would be? Should we get that break?
Well, I think the market's doing that right now, right?
Yeah. I think we're in the process.
We're still a ways from 4,200.
But here, let's real quick. This is a chart, and I'm just going to show you just some commentary from the ForexAnalytix chat room this morning. And when I posted this, and I talked about this last night on the trade-off, I did it with Michael Brown. And Ryan, I'm sorry, don't be jealous, buddy, but I had to steal your guy for. I'm just kidding. He had to fill in for
was he awake?
He was he was actually mumbling really weird, but
no, that's normal.
That's normal. Well, this is a really big chart, and this is my comments. I'll tell you my analysis here in a second, but this is the point I was trying to make in the ForexAnalytix chat room. I can't express on the mobile app because this analysis goes out to our traders on apps and stuff too, not just in the chat room. On the mobile app, how important the S&P chart is today, but I can hear very key support, guys, gals, that the market has to hold today, and I can't express the importance of this level here in the S&P. The reason why is so many different reasons. Technically, first of all, yeah, we got a head and shoulder pattern. You can look at it as a triangle. You can look at it as some sort of consolidation since the summer, and we're testing that support. Also 161% extension of you can see that last move higher from last week, right? When we hit that was options expiration day. We hit the high of that triangle reversed, as we Dale, you remember we did it here, and we're like, hey, watch resistance here. And so we just hit the 160
harmonic up there.
It was a completed Gartley pattern that it looks just like this for those of you that missed it. Maybe if you saw me on Twitter, but that's what the Gartley pattern looks like. We hit the 161% extension today, 78% retracement of, you can see this fib level of this last big move of August, basically August, September range. We're at the 78% retracement. We're actually slightly below it. Trendline support right now, head and shoulder pattern neckline. I can't express to you guys the importance of where we're at today. Now
I hope it holds and gives us a rally into next week, because it's not going to hold long term, bro.
Right, but the problem that we have is, as you pointed out today, VIX is screaming.
Yeah,
copper's dying. Copper's breaking down.
Yeah,
gold's shitting the bed and reversing. After a false breakout yesterday, and the dollar is ripping. So you put all this together, and it's not looking good. Now I know it's pre-market here, but you got things not looking great, and then you got yields that are ripping. I have multiple people actually texting me last night, people that I don't normally hear from on a daily basis. They're texting me saying, what's going on with the bond market? Oh my God, everybody's the US bond market's dying. I'm like, it's global. It's a global issue right now. You got yields are ripping everywhere. If you take a look at boons, we can just go ahead and look at the bond market. You look at yields. They're just look at the green across the board globally. It's really, it's crazy. I don't know what to say other than, holy crap, we're at some really key levels here, and you have to be really careful with the market. I should probably just really quick take a look at the DAX. Last night I was doing analysis on the DAX. I'm like, yeah, the market was green, but we're probably going to test the 200-day moving average today in the German DAX based on what happened in the US equity markets. And this is the analysis from last night. I'm like, we're post FOMC, the risk is a test of the 200 DMA. And the DAX is down 1.5%, testing the DMA right as we are speaking right now. These are
DAX is off the
levels.
Tracks.
What's that?
The DAX is off the tracks.
It's off the tracks after hitting a new all-time high, just literally a month ago, or a month and a half ago, rather, right there. There's some risk out there, guys. I don't know if usually, when the markets are down pre-market like this, you get a bounce right out of the gate, right? As soon as the market opens, you got a lot of bargain hunters that are out shopping. We usually get that on a day like today when we're down, 1% in the S&P. But, if we're down less than 1% right now in the futures, why can't we be down 3% today? Why can't it be a gap and crap day when you're seeing everything unfold the way it is? I don't know. I'm really, really just very, very cautious today with risk. It looks very ominous. But real quick before we go into kind of like setups for today, Ryan, I want to get your take on the FOMC yesterday. I think that I know we talked a lot about this yesterday afternoon in the chat room or post FOMC. I think the market is actually resonating with the higher for longer. Like when he says we're trying to find the level to stay at, I think that was the actual sentence that the market said, holy crap. We're not, after looking at the dot plots and ignoring them for because we just assume that we're going to go into this, recession and then Fed's going to have to cut. They just want to stay. I mean, what's your take following the FOMC yesterday?
It's one of those things. It's a surprise and not surprise. It's not surprise that the dots went up. We've been touting that long enough that what central banks need to do, even if they're hitting peak rate, is keep the message, the higher for longer message. Been banging on about it for months. Central banks have been banging on about it for months. I don't know why all of a sudden the market suddenly believed the higher for longer message that's been there for so long. But markets are going to market, and we knew what they were going to do. But yeah, so it's part of the whole bigger picture. Everyone's coming to their peaking rates, whether the Fed's won more, whether the BOE's won more, whether the ECB's won more. We're at the peak, okay? There is no further upside. So now we're going to play, as we've been saying, who's going to keep rates up the longest because who's going to have the better economies? And that's the US. So we get over the Fed. We now know what's important to the Fed. It's keeping rates higher for longer. So if that's the case, who's going to be cutting first? Well, you're going to be looking at the UK or maybe the ECB, which is why the dollar is strengthening, because that's where investors want to park their money. As I say, I'm just a bit surprised that it took the market this long to come around to that conclusion.
Yeah.
Go ahead, Dale. Sorry.
Anyway, sometimes it's like things happen slowly and then all at once. It's like that tipping point, that last snowflake to cause the avalanche.
Yeah.
It's always mystified me.
But what's good for us, and for you, Dale, and us doing these shows is that we've been telling you the snowflakes coming down for months. So for traders, it shouldn't have been a shock what this is. If you've been watching, you, Dale, or Blake on his shows, Flow shows in our chat room, it wasn't a shock to us, and that's the great thing about our chat room and community. We've got these sort of things now down before they happen. We don't get surprised when they do happen in the market's eyes.
So, I agree. And that's the thing about being on this free face show that we do every day. We just, we keep you abreast of what, the market, way we're feeling it, way we're interpreting it as a team every single day. So make sure you guys are here every day. Hey, Kman, what are your takeaways from the FOMC? I think, I already told you what I think, but let's hear what you think.
As I've been saying, two things: data dependent and higher for longer. And the message that they wanted to pass to the market was pretty clear. If you guys didn't get it yet, look at our dots. We are going to stay higher for longer. That's the concentration to the top side of the dots. And there's not much else to read out of the FOMC. And he's sending us to the next set of data, which makes the next jobs report again a very, very strong one. And then a quick word on what's happening in the markets. The seasonal callers will be jubilating this month because
absolutely
it's a bad month for the equity markets and a good month for the dollar, and it's materializing. But yeah, I think the dollar is to remain bid as well, and risk offered. And look at what's happening. I know you're in the mix, but look at what's happening on the rand and the mix. The mix is finally starting to respond a bit to risk as well. We got the data out.
Yeah, just got some data out. Yeah, it looks like the dollar is continuing to move higher.
Good claims
Yields are
again.
breaking. Go ahead.
Good claims.
Yeah. It's the U.S. exceptionalism story again. I mean,
Crap Philly Fed though.
yeah, that is a bad number. That is a bad number right there.
It has been a bit flip-floppy of late, so yeah, take it with a bit of a pinch of salt.
Yeah, but man, I know Dale's got an interview. Thanks, guys, for your input. But what last question I got for you, and then I'm going to ask you, Ryan, and then Kman as well, and then Dale. I know you got to take over, but look at these yields, global. I mean, what do you make of it? I mean, how's the market going to take in these like higher rates? What do you think, Ryan?
Well, it's going to take it to what it means. If you want to sit in some decent yield, you know where you're going to go, because you're going to get better in the US than you're going to get in the Eurozone. Maybe the Bank of England, with its pause, keeps it a level playing field, and then who you're going to invest in, US or UK at the same yield? Probably going to go for the UK. So I don't think we're going to go much higher than where we are now. The only thing that would tip us higher is if we start seeing more inflation numbers coming in hot. We've had two. If we get a third one, that's a trend, and that's probably why the Fed kept that last hike in the back pocket, just in case we do see inflation trending up. They can say, well, we had that hike in our back pocket ready for this occasion. But the longer they go on for pausing, the more the market will think they're done.
Kman, go ahead.
I think the government shutdown could have something to do with what's happening with yields too. It's being priced in. A lot of people are saying it's going to happen, which makes me think, it's a consensus view of government shutdown now. You've been talking about that, Blake. So, and Harold yesterday said it'll last a couple weeks.
I think it's a big risk. I think it's a big risk. People, but like I said, people are selling. They're selling, treasuries. I mean, they're selling fixed income like everywhere.
Selling everything.
Like everything. Yeah. I mean, Kman, last minute. I know we got Dale's guest here, but Kman, any thoughts on yields?
No, I think it's going to continue because the Treasury needs to fund, and Fed tells us higher for longer, and that's yet another repricing to be done. Now, whether it goes to 5%, possible, but it's likely going to go at least to 460, 470 on the 10s, and why not 5.5? Pricing on the 2-year, pricing in the potential of the Fed going for one last one. So it's possible that the 2 years go to 5.5. And then it's going to be over to the data growth. That is going to, besides what's happening on the Treasury and a potential stress factor for the shutdown, it's going to be real data, because you can be Treasury as much as you want and trading the shutdown. And we all know that once the shutdown is over, the stress tends to come out of the market a little bit. But if the data start to roll over, then I think the party is over for yields as well. And it's going to be important. We have been talking about it. We've been warning people. And I think even more than inflation, it's going to be jobs and the consumer where we are going to have to look at. And that's it for me. For the time,
all right.
Don't change a winning team. The dollar is still your friend, I think.
All right. Thank you very much. And Michael, you asked about the head and shoulder pattern and the Russell. Yeah. I mean, we're below the neckline, 618. Should target at least this triangle low and maybe even to the support zone down here if things get a little carried away. So Russell's definitely the weak sister. Yeah, weak sister here. So Dale, it's all yours. Buddy. Sorry to bleed into, excuse me, Pavel, for bleeding in. We just had a very, very busy last 24 hours and have another busy 24 hours ahead of us, 36 hours with the BOJ. Don't forget, guys, BOJ is Friday morning in Asia. It'll be tonight. And I know Kman, Ryan, you guys are either going to be getting up really early or staying up and being silly town late at night for the BOJ, because it's going to be exciting. And I'll see you guys there. Dale, thank you very much. Thanks, everybody, for listening in today.
Thank you.
All right. Thank
Cheers,
you,
all.
Kay, Ryan, Blake. Nice show. You know, we're looking at the world coming to an end. Pavel, how are you?
Hi,
Welcome
Dale.
back.
Yeah, thank you for.
So this is why you trade wheat spreads, to avoid all this volatility.
Yeah, exactly. I mean, I've been pumping these uncorrelated opportunities for the entire year, and probably maybe even last year. So that's the reason. So it's a way to avoid the macro uncertainty, at least if we do not have a liquidity crisis, because when you get a liquidity crisis, then everything comes down the drain. So, but we are not there yet.
Well, I'll tell you, I may as well, you know, put it out there, but Joseph Wang, you know, the guy who worked at the Fed Guy 12, just wrote a recent piece, and, you know, he's not an alarmist. So, but he's saying that because of certain aspects of, you know, different structures, that the risk of a liquidity crisis is out there now. And so if he's talking about it, then, you know, he sees, you know, what the engine is doing inside the engine. So something for us to be aware of. Maybe we're looking at a little bit shades of it today with risk off. Everything's lower except the dollar, right? So anyway, it's I'm here to find out what you're thinking, buddy. So how did that Kansas City, Chicago wheat spread work? How did it work out for you?
I did not trade that personally, because I'm no longer a trader. I'm focusing on a more longer term opportunities. So maybe I would call myself investor, which is something I never was. So that's, you know, to be honest. But let's check it out. I hope I have it somewhere. So this was the original spread. Maybe we can move to December expiration, and let's switch just to the price itself. And I think we were talking about this at the beginning of June. So yeah, it went up somewhat, but overall it was a sideways action. So it was not a total failure, but I was expecting more from it for sure.
Well, it was better than being long wheat, which I've been looking for a bottom. Maybe we have one now, but there have been several since you and I talked, false starts for a wheat rally. So, you know, sometimes making a little, not sometimes, all the time, making a little is better than losing a lot.
Exactly, and I was
that doesn't show up on your P&L.
Exactly, I was proposing this opportunity exactly as a better way how to play the wheat market, and it turned out to be a really better way, because, as you said, wheat has continued to move lower. Not to mention the contango, which would, you know, act against any long position in wheat. So from this regard, it was a success.
Okay, so what's top of mind now for you, Pavel?
Yeah, I was really trying hard to come up with some perfect opportunity, but
they don't exist.
Yeah, they don't exist. And whenever I'm trying too hard to force myself to come up with something, it's usually a flop. So I decided against, you know, looking for a certain single opportunity.
Well, I see something in your research box right there, because I've been saying that the miners were going to continue to get cheaper. and they were keeping me from being bullish the metals. I'm still looking for lower levels, but you have something there on silver mining costs, but that was the second quarter. You track that, and because you know what I'm feeling right now, Pavel, from a
Mhm.
sentiment standpoint, you know how disappointed silver bulls are. You know, everyone's waiting for the short squeeze.
Mhm.
So those are the physical guys. So, and I've even interviewed guys, and I asked them about the miners, and one guy said, who's a good technician, he said, "Why do you even want to invest? They're lousy businesses." So the sentiment, if it's negative in the precious metals right now, it's that much more negative in the miners, which have way, way, way underperformed the physical market. You seeing anything there, contrarian wise?
Not yet.
Or
I think,
or are costs going back up because energy's going back up?
yeah,
Uh,
definitely the costs are going back up because there was a surprising drop in silver mining costs. I think it was in the first quarter, if I'm not mistaken. And in the second quarter, the costs went back up to, I think, $17 for the data set I'm watching. So the costs are basically back to the level they were last year. But we are still far from the level where there would be pain for the miners, because the best long-term buying opportunities in silver were when the mining costs, or when the price approached the mining costs, and a lot of the miners became unprofitable, and we are not there yet, far from that. So there's definitely more room for further pain to explain the situation. But
Okay.
there's no guarantee we must get there. These occasions are quite rare. So I do not, say that this must happen. But just
Well, I'm just saying that what I noticed from just the vibe in the air and the people that I talked to, a lot of people that were, bearish stocks, they've been hiding there and they've been getting killed. And what they were trying to save by not being in US equities and tech and stuff like that, they gave it up in the miners. It was no protection for them because it's all one market anyway. And they're people that love them long term barely want to talk about them anymore. So
That's
they're the
true.
most unloved group through my interactions with traders and analysts, most unloved group out there. Maybe bonds are, but silver ranks up there.
Yeah, but it's not
heartbreaker.
surprising because the current environment is outright bad for miners. The high inflation, when the energy prices are going up, when there are labor strikes and higher for longer and so on. This is squeezing the miners, because even though gold and silver prices are not exactly low, their costs are rising faster than the price of these metals. And if you want a perfect indicator for that, just look at real yields. Real yields are rising, and that's not a good environment for miners. So I think people should not be surprised by this. And what I really think is funny is when someone is pushing oil to go higher and miners at the same time. It's incompatible, unless we get a hyperinflation, of course, but we are nowhere near that territory. So if we get a higher inflation or even high inflation, that's not exactly good for miners. It's good for
what silver needs is not the force of inflation. It needs a bear market in the dollar. Okay, so that's what I think is driving down the price of everything. And when the dollar's good, what can you be long right now with the dollar strengthening for the last 7 weeks? Some equities, but they've rolled over. Bonds aren't getting a bid. Precious metals are getting hit. Commodity markets are under pressure. So it's all about the dollar, isn't it?
Yes
Yield,
and no.
dollar?
Yeah, my opinion is slightly different. I think it's not just about the dollar. In my opinion, the real yields are more important right now, even more important than the dollar. I can even imagine gold and dollar going up together. Maybe not silver, and silver can go sideways or drift higher, but this is due to the situation around the world, the geopolitics, and the risks out there. So I think, or at least for me, I'm watching real yields more than the dollar with regard to the precious metals. So because people, when I think people are currently happy holding the dollars because of the high yield, but they also have the geopolitical risks in mind. So when this relationship turns and the real yields start to head lower, people can suddenly discover gold to offer, some appeal to them. But that won't happen until we get a reversal in real yields.
Okay, well, let me know when they ring the bell.
Yeah,
so, and okay, everyone, it's safe. It's good now. So I see you have copper up there. We have a major breakdown in the copper, that massive triangle we finally broke down today. So, are you talking about taking advantage of lower copper prices with what we have in the upper left-hand side?
Not yet. I would prefer to ride the trend because, like I said, I do not see any good opportunity right now besides the dollar. But even the dollar is something that's, the best opportunity is already behind us. So
the Dr. Copper is being sued.
Yeah.
Yeah, for impersonating a bull market.
Yeah, but
because a lot of people have been buying, copper's the new gold, and we need copper and copper shortage. So anyway, I'm just letting you know that Dr. Copper, better get his flu shot, but it looks like another 10 cents or lower is possible to me.
Yeah, I think even more. And here is the post from our Twitter that is from 2 weeks ago, which basically summarizes our bearish outlook. These are the interdelivery spreads on copper zoomed out, and we asked a rhetorical question: what do you think comes next? Which was a follow-up to a bearish post where zoomed in, these copper spreads were already moving lower while the underlying was drifting higher, and we were clearly bearish. And today's breakout is just confirmation of this outlook. So when I open these spreads again and show you the same chart, this major divergence will be resolved in one way or the other. And as we told our followers on Twitter, we expected the copper price itself to play a catch-up, which it is doing right now. And I think, or I would not be surprised by even larger move lower than 10 cents. I think we are currently breaking down from this consolidation, and I think we can go even as low as close to $3. I would not be surprised by that. But at the same time, I think a better way to play this is through the copper gold ratio, which is multiplied by 100 on this chart. And this level, in my opinion, is really critical for the copper gold ratio and the copper itself. And The ratio was unable to reclaim that level, which also encouraged our bearishness for the copper itself. And if I zoom out and maybe make chart a bit taller, you can see that there is a plenty of downside till 0.16, 0.15, and remember the chart is multiplied by 100. So that would be my target area, and you know, I have no reason to be convinced that the ratio must drop there. But if we get a breakdown below the low from May, then that would definitely be on the table. The area between 0.
So why not short copper positions with that outlook?
Because by using gold, you are basically hedging. Just give me a second to think through it. The lower volatility is definitely the reason number one. But in my opinion, you are hedging against if gold is sensitive to rates. Yeah,
well, you showed that copper chart, and you know, I just threw a dime out there, and you started talking about prior lows. I think that's March's lows out there. That's a big trade from here still.
Yeah, I think the reason.
So is it just risk aversion? Why not get short copper? All your stuff is saying it's going down.
Yeah, it is definitely mostly about the risk aversion, but also by shorting this chart, you are basically shorting copper and buying gold, which provides certain, you know,
lower risk trade.
Lower risk and protection against, for example, some banking risk or systemic risk, because in such a scenario, copper will definitely drop much faster than gold, because gold would be bid because of the banking or potential banking crisis. So that, I think, would be the main reason for sticking with the ratio instead of the copper itself. But even the copper itself is fine. So
Okay.
Yeah, so yeah, that's probably the reason number one. But at the same time, copper is no longer overbought, because when you take a look at the commitments of traders data, you can see the positioning is rather neutral, maybe even slightly oversold or becoming slightly oversold, at least by looking at the net positions. The net traders indicator is looking better. It shows that the market is still slightly overbought, but you know, there is no extreme positioning right now, so that is something to keep in mind. But the relationship between positioning and upcoming price move is quite loose, so the price reaction can be much more dramatic than the reaction in positioning. So that doesn't rule out drop below the previous low in May. But obviously the $3.50 is the first target, and if that breaks, then, as I said, the prices closer to $3 are likely. So
okay. A view on the dollar and yields. We could wrap it with one or the other.
Regarding the dollar, I remain bullish. I have personally built a massive long position on the dollar between 101 and 102. And when I take a look at positioning in the dollar, you can see that it is still pretty much oversold. There has not been a significant reaction to the rally.
No.
We are starting to see first signs of reaction or long covering in the euro. which is here. Finally,
So now so all the longs are finally giving up the
yeah.
ghost on the euro now. Okay.
Yes, they were holding steady
Yeah.
till the beginning of September, but
Yeah.
finally last week, or the data from last week revealed that
Well,
they are
must be
starting.
time for a reaction then.
Yeah, they are
Now
starting
that they're gone.
to pair their long positions, but the dollar itself, remains still quite oversold.
Targets? Any targets for it?
Well, maybe the first obvious target is, in my opinion, somewhere below 110, because everyone has 110 in their crosshair. So I would stick with something like this, 109. That would be my
that's
first.
61.8 back 109.
Really? Oh, that's even better. So that would be my first target, and then I will reassess the positioning and also the rates, especially the short-term rates or expectations for short-term rates, are trending up. I mean, the SOFR spreads are trending higher, and this is also supporting the dollar, as you can see on this chart. So I have no reason to believe the rally on the dollar is over. Of course, there can be a consolidation or a correction, but unless the data deteriorates, then I will stick with the dollar. And I'm personally stuck in T-bills, and I have no desire to change this right now.
Okay. So Pavel, best way for people to follow your work?
Sure. You can go to our website, to spreadcharts.com. You can sign up for our software and other services. We have also a free version of the app that you just saw, and it's pretty powerful even in the free version. But also you can sign up for the premium offering, which is not just the software and advanced features in the software, but also research and some signals powered by artificial intelligence that help us to spot potential opportunities in the markets. So just spreadcharts.com.
Okay, Pavel. Well, Pavel looks for the most conservative way to, take risk out of narratives, and he's very good at what he does. And consider him for your intelligence gathering. And go to his website, check it out. Pavel, thank you for your time today.
Thank you,
You know
Dale.
what? It's wisdom that if you don't see anything like you were talking about, when I find myself searching for things to talk about and things to do, there's probably nothing to do. And it's an uncomfortable feeling, right? But if you're patient, it's not. It's good.
I would not say it. I would say it's not that uncomfortable because I'm getting paid 5% per annum for doing nothing, so I don't complain.
Okay.
If you know what I mean.
Right. Yeah, I do. Yeah, T-bill rate. So, I'm just saying that, people want actionable ideas. So if you're patient, something will hit you right in the face. It'll be so compelling. You'll be compelled to take risks. So, nice discipline and demeanor about the markets. No FOMO for Pavel.
Yeah, thank you, Dale.
All right, buddy. So I'll be in touch with you. We'll talk, early winter.
Yeah,
And
great.
I bet you have a few trades cooking then.
Thank you, Dale.
All right.
So looking forward to it.
Pavel Hala, follow Pavel at spreadcharts.com on Twitter. And that's going to be a wrap. Everyone, I hope you did okay during a little bit of a glimpse of what a liquidity crisis looks like on your screen today. And have a great day. Don't just count your pips, count your blessings. People are thanking you, Pavel, and you could join the team in 16 minutes on the morning edge. We'll wrap it up tomorrow, TGIF tomorrow. Okay, feels like Friday today. Warriors.
Mhm.
Keep your battle dress on one more day and then watch football. All right. Adios, everyone.
Bye.
Thanks.
Guys.